Good afternoon, everyone. Today we have a milestone interview for the first time with a leading player in the life insurance space with Jurgen, and I'm going to have to read your name again. Sorry, Jurgen Vanhoenacker. So welcome, Jurgen. Great to have you with us. Hey.
Thank you.
Great to have you with us, and long time no see, but I see you're in great shape. You are here representing your employer of over 20 years now. Incredible. You're going to tell us more about that. And it's not any company, it's Lombard International, which is a leading player in the life insurance business. It's Luxembourg headquartered. It was founded in 1991, and fast forward 30 years, of which 20 with you, as head of business development for Europe, among other senior roles, and member of the executive committee, is the fact that you actually manage or oversee 45 billion in AUM, employ over 500 people that are based in over 20 offices around the world. And last but not least, I should mention your PE ties. First, you're owned by Blackstone, which is not the least famous of our private equity star firms, but you also actually manage over 2.5 billion of your assets are invested in PE, which you started 15 years ago. And I think this is one of the surprising facts we're going to discuss today, because our community in private equity are not necessarily aware of the importance of PE for your business, and that actually it is a natural match. So Jurgen, welcome. Let's spend these next 10 minutes together, if you're okay, you and I, with 3 questions, and then we will open to Q&A as always. And please do ask questions. We sometimes get a lot, sometimes not enough, and make use of Jurgen. He's very busy, and he's our one before last interview of this 10-year, 10-minute series. So Jurgen, great.
Thank you very much, Rajaa, and thanks for your kind words of introduction. So very happy and pleased to be here in the session with LPEA, and I must say Lombard as well is a proud member of LPEA recently, so we're very happy to join the family, Rajaa. So looking forward to this.
Yes, thank you, and welcome to the family. And I should say the chairman of Lombard is also one of our key members, Norbert Becker. So we're very happy to have all these virtuous circle together with you. I'm sure we'll do a lot together.
Absolutely. So really exciting. I'm looking forward to this, Rajaa. So perhaps to come on your first observation that, you know, not many people see that logical connection between life insurance and private equity. I think it's a fair observation. It means that we still have, as an industry player, a lot of work to educate this financial community as to why this is a fantastic fit. Now, this being said, it is more intuitive than what many people would think. And actually, it emanates from 2 very specific needs that high net worth people and sophisticated investors they have today. On the one hand side, these wealthy people are increasingly focused on wealth planning, wealth preservation, wealth transfer, and increasingly they're looking at life insurance. So for people who are not familiar with our business, this is basically families who decide to put their wealth or part of their wealth into a life insurance and run the allocation from that perspective. So that's one thing, right? The other thing is that, as you know very well, Rajaa, many of these wealthy investors have an outspoken appetite to look into non-traditional asset classes above and beyond the traditional bonds or equities, and they want to look for additional alpha there. Mm-hmm. And it's actually at this intersection where you see that both worlds are fitting together, actually. So we have quite a few clients who are engaging in a long-term wealth planning, and at the same time are integrating private equity assets as part of a long-term asset allocation strategy. Yeah,
I think you said the magic word, long-term. I mean, if I take a life insurance contract, I want it to be long-term, and it so happens that PE is long-term. But how come so few players have come to this yet when you started 15 years ago? So I just want to understand more your AUM development with PE.
Yeah, well, I think part of it is that, well, we Lombard have always been from the beginning focusing on high net worth sophisticated investors. So relatively quickly, the moment you start engaging with families who are worth 20, 30, 50 million or more, you automatically are being confronted with their investment strategy and their specific appetite in terms of asset allocations. And as of that moment, we have started looking into private equity. And I think the first private equity asset that we took on us, as you mentioned, this is probably more than 15 years ago. And over time, we've built up quite a significant book of 5.5 billion non-traditional assets, of which PE represents 2.5 billion. Now, to give it a little bit color, that 2.5 billion book of private equity assets is across 1,300 private equity positions we have in our life insurance policy.
I guess they are mostly funds.
So we have two types, Rajaa. On the one hand side, you have the funds, which is a direct PE fund asset. But what we're doing as well, and increasingly with our banking partners, is that we're integrating feeder structures, PE feeder structures, which banks are running on their vintage programs, and integrate this in our portfolios.
Mm-hmm. And so, speaking of long term, the corollary tends to be volatility. I guess in your contract you have something else than PE in terms of asset classes. How has COVID-19 impacted your focus on PE, and how do your clients react to that in a broader context of increased regulation, though?
Yes. So clearly, indeed, PE is to a large extent a decorrelated asset, and it is creating a buffer to deal and to mitigate the volatility that we've been now experiencing, in specific with the pandemic. Now, more specific to the pandemic and COVID, I would make three observations. The first observation is that we have, and it's a little bit a strange way of putting it, Rajaa, but many of these wealthy people have suddenly realized that they are mortal. Again, sounds a little bit strange.
Yeah, no, it was a humility test, we say.
Absolutely, for all of us. And this has raised the whole topic of wealth planning, wealth preservation, wealth transfer, much more higher on their agenda. So we have seen, since the lockdown and COVID, we have seen an increase of these wealthy families reaching out to us and our distribution partners to consider life insurance as a planning tool. And within this context, we have seen actually very strong performance until this year in our business. So that's the first observation. A second observation I would like to make is that on our existing clients, COVID has triggered a bit of a shift in their investment strategy. And to be very simplistic, but just to make the point, we have seen the more, let's say, plain vanilla clients moving in more defensive investment strategies. We've seen the more sophisticated high net worth families moving into a more offensive strategy. And again, that has picked up on the private equity side.
What is defensive then, for instance? Bonds?
Yeah, moving more in money markets, bonds.
Because at LPEA, we believe PE is actually defensive. And we show with clear statistics that the outperformance of PE increases in bad times.
Yeah.
And this ability to be hands-on and focused. What do you think of that?
Yeah, well, it's a matter of terminology. It is defensive if we bring it back to the correlation, and it creates a buffer for the volatility. But I was expressing it more offensive in terms of the potential risks attached to the PE assets in terms of the underlying companies. Yeah, and if I may just add, Rajaa, the third observation that we have made since the pandemic is that on our 2.5 billion private equity, we have seen a lot more transactional activity in terms of capital calls. That was interesting to observe, and from two angles.
Of course.
You had capital calls which were more directed in giving liquidity injections for companies who are obviously seeing a big drop in the revenue line, and therefore we need to consolidate these assets. And we have seen the other side of the spectrum, in a way of speaking, where there's been lots of capital calls to invest in companies who have seen a significant increase in activity. So companies building medical equipment, companies in biotech, in digital working, digital processes and all of that.
Before my third question, Jurgen, do you mind commenting around the regulatory framework, which you've been at the firm 20 years, you've seen change dramatically. Has this helped or hampered your efforts to develop PE?
It's a tricky question, Rajaa. As being in charge for business development, I would ideally prefer not to have any regulations, but this is wishful thinking. So let's not go there. Regulation, as not just in our business, but I think in every business, has significantly become much more sophisticated and developed, and we just need to deal with it. And in the end, it is all in the interest of our clients, because it protects them. It gives them a much more comfortable way to transact in our business. So yes, more regulation every year, more regulation, whether this is IDD in our world or anything else. But there are ways to really integrate this constructively in our business, and this is what we're doing.
I think we should have you over for a much longer session, because I see we already are 10 minutes. But I do want to ask you the third main question. If we look at it from a GP standpoint or a PE firm, I mean, how does it work? Typically, that if a firm wants to be allocated to one of your contracts, if you describe a bit the value chain.
Yes, I'm happy to do this, Rajaa. So without going into too much technical detail, but every life insurance policy at Lombard has an investment strategy, right, which is matched to the risk profile of our clients. This investment strategy is being executed by an independent asset manager. So it's not Lombard who is deciding in which assets to be investing. This is done by a vast network that we have of independent and professional asset managers. And they operate on either a discretionary basis or an advisory basis, yeah? But again, let's not go too much into detail. But it's these entities, Rajaa, who are actually identifying the opportunity for a particular private equity fund. So this is the first start. And this is then being flagged to Lombard. Okay, my client would like to invest in that particular private equity fund. As of that moment, Lombard will go through a due diligence process. So we will be taking our fiduciary duties and check whether this particular private equity fund is ticking all of the boxes that we wanted to tick off. But we mostly look at regulatory status, where is it domiciled, is it authorized, track record, substance, and all of that.
So it's more of a B2B2C model that you're putting forward.
Correct,
yeah.
Correct.
Okay.
So, yeah.
So it's already time for Q&A. I have 3 questions for you. The first one is, how is it to be owned by a PE firm and not the least, it's Blackstone, the biggest? Yeah,
again, tricky question. So I need to be careful. Perhaps somebody may be looking from Blackstone. Overall, I must say, it's been a very good and great experience so far. Blackstone has, since the beginning, when they bought Lombard, invested significantly in the firm, whether this is in people, IT infrastructure, product development, market development. So this is very good. I know some people may think, well, if you're owned by a private equity firm, it's all about short-term focus, dividends, and profitability. Yes, this is important. We shouldn't hide this. And these companies are not charities, and Blackstone is definitely not a charity. But there is a slightly more nuanced view on it as well. If you really, as a private equity firm, would like to develop value, you need to have a long-term strategy, a long-term vision, and having a management team which is capable of executing this long-term strategy. And this is overall the key principle of Blackstone dealing with Lombard. They are constantly helping us, the management team, to articulate our vision and to implement the strategy. So, long story short, Rajaa, yes, it is a specific dynamic to be owned by a company like Blackstone. It is pretty intense. They're very demanding, but it has allowed us to grow significantly the business as well. And this is, in the end, most important.
No, it's a huge success story. So another question I get is, how is it to be headquartered in Luxembourg? Does it help? It doesn't matter?
Well, Luxembourg was when John Stone founded the company. Luxembourg was a very deliberate and conscious decision because Luxembourg was the first country to implement the life insurance directive, which basically allows us to operate throughout Europe on a passporting basis from Luxembourg. And this is still very much valid. And I must say, from my personal perspective, if you look at the Luxembourg ecosystem, it is very unique. And sometimes we no longer realize it. But the fact that all the actors, whether these are governments, regulators, industry associations as yours, Rajaa, and all players are all very much aligned, and moving the ball around quite quickly, it's a fantastic breeding bed to develop a company like Lombard from Luxembourg. So we have absolutely no intention to leave Luxembourg, to be honest.
I like what you say, and we value very much as well the fact that the public and private sectors are working hand in hand. This is one of Luxembourg's key success factors.
Yes.
So the last question I get for you today, and then I have one again, where do you see future growth coming in the business coming from? Sorry.
Well, on a macroeconomic level, I think all the reports which are coming out every year are confirming that there are increasingly wealthy people on this planet year after year. Now, there are a number of regions where the growth in private wealth is much more significant than elsewhere, like Asia. But across the board, there are more and more people walking around who are wealthy and who have specific planning needs.
Yeah, I have stat for you. The wealth of families in the world is 95 trillion, more or less.
So we're only a drop in this ocean, then, Rajaa. So that the opportunities are huge, and we've only scratched the surface from
I see you must be great at your job, from what you just said.
But we fundamentally believe that there's still significant opportunity, and in particular, if you think about that, these wealthy people, apart from taking care of their investments, they also need to take care of their businesses, their family, in terms of wealth planning. We believe that, you know, our industry and the life insurance has a great future. And again, performance in the past and this year has been very strong, and I would strongly anticipate that this continues for I don't know how many years.
It's a great transition to my question. I'm sure if you've been there 20 years, you're going to stay another 20. But speaking of which, you know, it's a bit seen from LPEA standpoint and from the traditional PE worlds that you're still so exploited or you're still under the radar. What do you think we can do together as an industry association with you as a leading local player to boost this awareness that there is this growth area coming up? That it's working very well, because it's not something that started yesterday. Maybe we should brainstorm together about it.
Absolutely. And I see my job as being in charge for business development as very much, you know, trying to help everybody in the educational process to tell our story, the Lombard story, and try to convince the people why they should be listening to us. And if I can leverage on your fantastic organization, Rajaa, to have access to all the members of LPEA, I mean, for me, this is a great opportunity. And yeah, I would be delighted to organize a seminar or a talking dinner or a presentation or a training, which may be of value to...
yes, I think, and you know, we just launched the LPEA Academy for professionals based in Luxembourg or now abroad, because it's online, to hone their PE skills. And actually there should be maybe a module on life insurance and PE, because it's structurally and philosophically a great match. So let's take the conversation offline and pursue it. Jurgen, any word of the end, or that's it for now?
Well, listen, I mean, I very much enjoyed the chat, Rajaa. Thank you for inviting us. Again, it's a little bit not a normal combination, but I'm really delighted that I had the opportunity to at least tell a little bit the Lombard story on private equity to the people who have attended. So thank you very much. And thank you as well for all the people who have subscribed and listened to my story. So
Jurgen, great to have you. Welcome on board, and definitely this is only the beginning of a long story and journey together.
Absolutely. Looking forward very much, Rajaa. Thank you very much.
So for the audience, the last interview will be next Friday with Nicolas Buc of UEL to bridge the gap, this time between the real economy and private equity. Take care, everyone, and see you soon. Thank you. Bye, Jurgen.
Bye. Bye, everybody.